Welcome, everyone, to Noble Capital Markets Basic Industries Virtual Equity Conference, and thank you for joining us today. I'm Mark Reichman, a Senior Research Analyst at Noble. It is my pleasure to introduce Mr. Kiran Patankar, President, Chief Executive Officer, and a Director of Maple Gold Mines Limited. Maple Gold is a Canadian advanced exploration company focused on advancing the district-scale Douay and Joutel gold projects located in Quebec's renowned Abitibi Greenstone Gold Belt. The company's shares trade on the TSX Venture Exchange under the symbol MGM, the OTCQB under the symbol MGMLF, and the Frankfurt Stock Exchange under the symbol M3G. Welcome, Kiran.
Thanks very much, Mark. It's great to be here with you, and it's great to speak with Noble Capital and your audience. So we're going to get into a slide deck, which is up on screen, but I'm going to talk to all of you about the substantive changes that we've made at Maple Gold. Obviously, we're in a resurgent and buoyant gold market. There's a lot of reasons why people should pay attention to Maple and Maple Gold. We're going to get into that now, but I'm delighted to be here, and let's get into it. Before we get going, these are forward-looking statements, disclaimers, which we will be making forward-looking statements during the course of today's talk. So let's cover the highlights, the why people should be focused on Maple as far as opportunities and growth, particularly with our gold assets in Quebec. With a smart transaction, which we announced earlier this year, which we'll get into later in the presentation, Maple Gold is a junior mining company, circa $30 million Canadian market cap, controls 100% of a 400 square kilometer land package in Quebec, with lots of advantages from an operating and a jurisdictional standpoint. But that land package, importantly, it straddles a major gold break and a productive gold break in the Abitibi, which is a renowned gold producing region. And the land package currently contains an established resource of just over 3 million ounces in total of gold at our Douay project. It also contains a past-producing high-grade mine complex called Joutel, which was contributed by our strategic partner, Agnico Eagle, and it contains Agnico Eagle's original namesake mine, the Eagle Mine. And then we contain a lot of significant blue sky potential. A lot of companies say that they have it, but certainly when you go through and you look at some of the geologic aspects of the land package and the fact that most of it remains underexplored to date, you can see that there's a lot of organic growth ahead of Maple Gold. The location, right? When you're looking at high quality exploration companies, location matters, right? It's not just the favorable geology and you're in a region that's known for, producing and past producing mines and historical sort of 200 million ounces plus of gold discovered with more to find. We're located just north of the town of Rouyn-Noranda, which is commercially serviced by Air Canada. You can fly in, you can get in a car, you can drive on paved roads 2 hours north. We're located right off the 109 highway with grid power, with a full service camp. And, we're within, 40 kilometers of Batagami, another mining center. Lots of infrastructure around us, and tremendous support from the Quebec government in the form of tax credits, et cetera. Value-oriented, data-driven approach. This is really one of the things that I've brought to the company. We'll talk about what we've done, but we're using the data more effectively. We've turned this company around and changed its strategy and approach, and all of it is, the goal is to drive better quality exploration and better quality development of what we believe and hope will be economic ounces. And again, when you're asking for, companies to look at, who the investors are, right? And Agnico Eagle, they're the largest mining company in Canada by size. They're the largest producer in Quebec. Their production base is over 2 million ounces in the Abitibi. They're now a 19.9% shareholder of Maple, having put money in. We've just done a very company-friendly restructured transaction with them. So we have full support from Agnico, and they're a phenomenal partner to have. Just thinking about the geology for a second, I'm a geological engineer by training, so this is near and dear to me. Obviously, I've spent a lot more time on the company management and capital markets side over the last couple of years, but it's important for investors to note where we are relative to these high-producing, gold regions and favorable regions. In the Abitibi in Quebec, and obviously it straddles the border between Quebec and Ontario. You've got three major gold breaks. One is the Detour Lake, Sunday Lake deformation zone. The other to the south is the Cadillac Larder Lake. Those are probably better known just in terms of the mega mines that exist along those trends. We sit in the middle one, which is the Casa Berardi, relatively underexplored. There's a producing mine that Hecla owns called Casa Berardi to the west of us, past producer called Veza, which is in the sediments to the east of us. That's a former Agnico and Vior mine. We control the entire land package in this dilation zone, which is essentially a split in the Casa Berardi fault where it forms the Casa Berardi North Fault, which our northern star there, which is our Douay deposit, straddles. And then the Casa Berardi South Fault, which essentially mirrors the Joutel mine trend. We control everything between those two faults and on either side. It's a very prospective land package to have. And importantly, when you look at analogs here, as Agnico has done and others look at, the big mines in the region appear to occur along these sort of splay features of these first order structures. So Detour, Canadian Malartic, and certainly Douay, Joutel, and Casa Berardi all sort of fit that model. We have an objective of really finding and unearthing economic gold ounces, right? So we have a pipeline of targets. This is our organic growth profile. Everything you see in the inset map in green was things that, Maple controlled originally before we formed the 50-50 JV with Agnico. Everything in gray is Joutel. That was the Agnico property, which was contributed with its past production and high grade past production was contributed to the JV. So now with the deal we did with Agnico, which I'll cover in a bit, we control this entire land package. We also control a property called Morris, which is non-core right now, but it's a very high prospectivity VMS deposit. We've got some very smart VMS people on our board and our advisory team. And it also happens to be located in the Matagami camp. So, there's some baseline sort of field work taking place at the moment. The point is that, we start with where we're going to add the most value for shareholders. That really begins with our existing resource base at Douay. Translates to unearthing value for Eagle and Joutel and the entire Joutel mine trend, which hasn't seen systematic exploration since 1993. And then looking at the property potential, the prospectivity of the rest of the property package, which includes other VMS and greenfield opportunities. What have we achieved over the last year? I mean, this is the systematic transformation of the company, the turnaround. Obviously it starts with the data. We know we're in the right rocks. The results from Maple previously hadn't been sort of indicative of the kind of potential we believe is here. A lot of that has to do with the fact that they were not incorporating a lot of the layering of geologic and geophysical and geochemical data that would allow you to sort of find better quality targets. And that's heavy lifting, right? Like our team, we've been doing more with less. I'll talk about some of the cost reduction measures that we put into place, but we took first principles approach. I believe strongly that, obviously exploration is inherently risky, but when you implement good process, you're more than likely to achieve better results. And so we started doing that a year ago when I became CEO. We've completed the majority of that now, and we have a much better sense of where we're going, which I'll cover in a bit. Importantly, I come from the investment banking world as well. I have a deep relationship with my counterparts at Agnico. We just spent 7 months negotiating and announcing and completing a very smart, company-friendly, win-win transaction with our partner that took, a lot of thought and time and effort because Agnico had never done a back-end right before in their history. Certainly, they don't do typically investments in companies at premiums. So again, this was designed to give the project a better path forward. We now control 100% of our own destiny with Agnico's strong support. And they did put, significant money into the company to fund our program, which is coming up, our drill program, which is coming up later this fall, winter. And they did so at a premium. They brought their ownership in the company to 19.9. And essentially, we've got, with tax credits coming back from flow through plus tax credits coming back from Quebec, we now have 5.6 million, which is going to be spent in the ground over the next 12 months. Corporate overhead and site operating costs have been right-sized for the company. That was something I said I was going to do from day one. It means more money's going into the ground, and our management team and our board and advisors are being strengthened as we speak. Governance is and capital markets, and technically we're a much better company than we were before. The strategy and the approach is straightforward. De-risking some of the ounces is just one part we can catalyze value. We still need to find what we believe is and explore the entirety of the 55 kilometers of strike on the Casa Berardi that we control. We've got a lot of value to unearth across the land package and at Joutel. So that's going to be the goal, obviously, of the next drill program, is really looking at some strategic infill at Douay with the goal of converting resources, because again, we have Agnico One of the milestones for them to trigger their back-in is achievement of development milestones tied to having reserves, pre-feasibility, and a minimum MPV. We've certainly got step-out drilling targets, down dip and down plunge of Dewey. We've got lots of high grade to focus on across Dewey and Joutel, particularly some of the stuff we did at Eagle in 2022. And then we've got new discoveries based on better vectoring, as well as testing the rest of the Casa Berardi. These are just the hurdles and the efficiencies that we put into place between, sort of spring and fall of 2023 and where we are today at fall 2024. The main takeaway here is that this is an easy thing to put on a slide. It's a hard thing to implement. It took management changes. It took an overhaul of the team. It took rolling up our sleeves and getting into the data, which was, it's $75 million worth of data that's been gathered by the company and our partner over the last 5 years. So we're now at a place where, in fall, we've got news flow, we've got efficiency, better integrity of data, roadmap to more ounces, better processes, and no turnover with a cost base that's significantly better. This is to show you a couple of details on the transaction we did with Agnico. We've obviously got 100% control with a clear path. That's the most important part, is we're no longer beholden to what's going to happen in February next year. If it's a bigger program, risk of dilution at the project level, or if it's a program that sort of sits on ice, then our principal asset could have been stranded. So instead of doing the expedient thing and trying to unlock $6 million of remaining earn-in, we came up with a properly structured deal. We gave up very little. It's basically the back end to acquire 100%, which includes Joutel plus $12 million that Agnico has put into the property and the projects at the project level. We've got these development milestones tied to an NPV, $300 million, 5% NPV, and a pre-feasibility with a pre-financing construction decision. If Agnico decides that we hit the milestone, they've got 90 days to back in. It's leveraged exploration and development. They've got to pay us cash, $12 million plus 2 times every dollar we spend from this day forward. Importantly, we traded equity project level investment for equity investment at a premium in a tough equity market, still for juniors. So we brought Agnico up to 19.9. Happy to have them as a strong strategic shareholder. And our program, importantly, is fully funded with excellent alignment with the rest of the Agnico technical team. These are just some of the things we've done to improve the G&A and the sort of more money going into the ground. They're in areas where investors should care about. Not happy, obviously, with the fact the company had $6 million in 2022, but certainly getting it down to under 2 in a relatively short period of time just shows you that our commitment is aligned with shareholders, that we want to see more money going in the ground. Done the same thing at site where, again, it's easy when you've got somebody else writing the checks. The camp costs, site costs were between 1.2 and $1.4 million, 1.5 million dollars Canadian. Since I became sort of general manager of the JV with Agnico, I brought it down to under 800-ish, and we've got more reductions to make, but more efficient operations. Here's the team, and here's who we are. Importantly, we brought some very key people onto the management team. Ian Cunningham Dunlap, notably, who's a 40-year industry veteran, advanced project development, geologist, engineer, PEng. He's going to help us to not only execute, drill programs on time, on budget, with a good sense of the strategy and the vision, but also, I think, unlocking the potential of our 3 million ounces. I mean, Ian was with High Gold, as well as one of our new directors, Darwin Green, which was sold to Contango Ore recently. And what did they do? They found a great deposit in Alaska. They de-risked it, and they got it to the point where a producing mining company, wanted to be involved with it, which is sort of the general path as you follow the Lassonde curve. So I'm not saying we want to enter into the developer part of the Lassonde curve right away, but I think having the people in place to show that we can do that is a key way that we can de-risk and create value for shareholders. We've also got proper project management at site. So geologists are doing geology, administrative people are doing administrative tasks, and it's just more efficient. At the board level, we've got Michelle Roth, an industry veteran, investor relations, capital markets professional, a lovely person as our chairperson. She's based in New York. Dr. Gerald Riveren is a renowned VMS expert, Abitibi-based, well-respected by the industry as well as Agnico. Maurice Tagami is ex-Wheaton Precious Metals. He's more on the operating side, metallurgist by training, PEng, helps us as we sort of advance the development scenario for our deposits. Darwin Green is our newest director. Delighted to have him on board. Again, he helped, he was CEO of High Gold, which has just recently sold to Contango, geologist, professional geo, and an excellent handle on capital markets as well. And Paul Harbage, right, is not just a pretty face. He's there, active. He's at site. He was with us in Agnico at site in August, and they really helped us with the Rethink program. He comes to us, he's with Faraday Copper as CEO, formerly with Gold Corp and GT Gold, and as well as Randgold. So great team, great board. Obviously, we've done a lot here. I won't spend a lot of time on this, but this has been the strategy to unlock value of the property with good layering and vectoring of proper data. It's always harder to put this stuff together in a cohesive model, but the team has spent the last year doing exactly that. So we have a much better sense of where we want to go. We went through some of this headache of looking at the original sort of what we were handed in terms of the data package. Sure, all the data layers are there in the background, but we're not seeing them plotted on maps and figures. And so we took the data, we had guys systematically relog core. We rebuilt the level plans, cross sections and long sections throughout the Douay deposit by hand, put it done in pen and paper, pencil and paper, and then digitized. And lo and behold, when you actually look at the rocks and look at the system more broadly, opportunities clearly pop up. So now we've got a more robust lithostructural geochemical model where we can clearly see open areas within individual portions of the deposit and across the land package. We're focused on some of the interesting aspects of the Douay deposit right now. These distal ends of the deposit, Douay West, we're focusing on here. Why? We have a focus on high grade. It is certainly, we're looking at economics. We're looking at things that are going to move the needle from a project development standpoint. And here you go with Douay West, it's a double the average deposit grade, and it's got the majority of the indicated, and it's got no limited overburden on top of it. So it's a very nice potential starter pit. There's 537,000 ounces there already. So, growing that and finding more high grade is obviously a focus. Then you look at the opposite end of the deposit, 531, you see again, double, almost triple average deposit grade at 2.5 grams versus just over a gram. But importantly, within this pit and within other portions of the Douay pit, you see intercepts of 28 meters of 8.8 grams, right? And so it's not just a homogeneous 1 gram per ton Abitibi style deposit. There are forces that are acting on this that are producing concentrations of high grade, but you don't see what those are until you actually do the interpretation. So here is the structural interpretation the team's put together on a dextral strike slip movement of the Casa Berardi primary first order deep mantle tapping structure. And when you see everything in blue and purple, this is the intrusive. When you have that type of dextral movement, you do produce pressure shadows if you're rotating a resistive block. And interestingly enough, those pressure shadows, again, this is a thesis, but those pressure shadows roughly line up with 531 and Douay West. So again, these are working theses to test with our next drill programs, but they're based on proper understanding of the system. This is also a slide just based on how we've compiled the multi-element geochem and geochemistry ICP data. You're seeing trends, you're seeing open areas, but importantly, you're seeing new maps and new things put out by Maple that represents all this data we've collected, but nobody's actually utilized it. Now we're utilizing it to properly vector and layer on all of our understanding on the structural regime and, the position of the intrusive, where the faults are located, splay structures, et cetera. So we're about 70% complete with all that rethink work, but we don't need to be 100% in order to drill. We're going to be drilling coming up later this fall and winter with a fully funded program. We're going to be doing the rest of this sort of 70 to 100%. It's going to be an ongoing basis. Obviously, as I mentioned, we're doing more with less. So, once we have a team, fully engaged on drilling, all of this better quality work with having a core library, understanding how to properly log, all these other things are going to just help with the overall understanding of the deposits. Lastly, I just show you on the geology side, again, the focus of drilling is really largely around Douay. There's going to be some drilling, obviously, around the Eagle-Telbel mine trend. And then the property itself remains ripe for new discoveries and remains relatively underexplored. As I said, there's 55 kilometers of untested strike. 6 kilometers of that comprises the resource, but a lot of low-hanging fruit here, not only along strike, but in the top 500 meters to test with a pipeline of organic growth targets. Just a quick snapshot of what the site looks like. Lots of well-established infrastructure, including a head frame, core shack, camp, mine dry, all the things you'd want in a high-quality deposit. And just lastly, in terms of our cash position and our capital or market snapshot, that's 376 basic shares, 400 fully diluted, high low of 9 to 5. And there's a lot. We're trading at about 8.5, 30 million market cap, just about $6-7 an ounce. 5.3 in the bank. 4 million of that is flow. 1.3 million is hard dollar. Strong analyst coverage, obviously happy to have Mark and lots of good shareholders, including Agnico at 19.9, a bunch of Quebec institutions, US and family offices and institutional funds and Canadian institutional funds. So again, just to recap, strong Canadian gold exploration development company, best jurisdiction with 3 million ounces established, plus a high-grade mine trend that is ripe for future development and exploration. Lots of land, great playground to explore, 55 kilometers of strike on the Casa Berardi, great partnership with Agnico, management that's aligned with shareholders, really looking at prudent capital allocation, discipline, exploration, development, funding to execute, and a proper discovery drill program teed up for this fall and winter, all trading at about $6 or $7 an ounce, with gold trading at 2,600. So I think it's a compelling opportunity, both from a value and from a future growth standpoint. With that, Mark and audience, I'm happy to turn it over and answer any questions you might have. Thank you for your time.
Well, thank you, Kieran. And, in the time that I've covered the company, I don't think Maple Gold has ever been better positioned for successful outcomes. So could you just highlight the very near-term priorities, including when you might expect to close the transaction with Agnico?
Absolutely. We announced the transaction in June. The restructuring was subject to a shareholder vote, which we obtained just a week or so ago. It was overwhelmingly supported by Maple shareholders. So we're just in the final strokes of just papering up the transaction. Expect that to close in the next 2 weeks. In terms of the near-term growth, as I mentioned, we have some field activities ongoing at the site. We're currently in the process of looking at the drill targets. We had Agnico at the site in August, and we've got full support. So we've got a small field program taking place at Morris, which I mentioned. We've got an exploration update press release, which is going to be coming out, talking about all the rethink work that we've done, what the strategy and the vision is going to be, which I started to foreshadow here on this talk. And then, of course, honing in on what are the specific drill holes, what's the order that they're going to be drilled, what's the goal of that drill program, what's the budget, how many meters is it going to be, and what's the timeline. All of those things are going to be coming up here in the next couple of weeks.
And, I wanted to focus on Agnico's option to acquire, to earn back into the project. And, you've already touched on kind of the criteria there to have a preliminary feasibility study or feasibility study that shows a $300 million Canadian net present value. So that's kind of of all the opportunities on your land package, that provides a clear path for investors. And I guess the question is how difficult do you think it is to get there, and over what time horizon, or how much, maybe said another way, how much exploration dollars do you think it will take to get there?
Listen, exploration is always, typically it's the more money you have, like the Osisko model kind of shows us, right? It's drill, baby, drill, right? So if you have the resources, obviously you've got, deep pocketed or strongly supported, and you've got the sort of, cost of capital is down because you've got, a significant sort of market cap and you can raise the funds easily, then yeah, you just go after it, right? I mean, for us, we have to be strategic. Certainly, there's a belief amongst us and certainly with our partner that there's a lot more to find here. But when I say prudent exploration and responsible development, obviously we have to be cognizant of making sure, and this is what the transformation of the company has really been geared towards. It's spending money judiciously and effectively in ways that catalyze value for shareholders, right? So low-hanging fruit stuff. We didn't drill over the last year, but we created a lot of value, by understanding the data that we had spent all this money and time and effort to collect, blood and treasure, right? If you don't use the data, what's the point? The second thing we did was, without even drilling a single hole in the deposit, we doubled our ounce count with a smart transaction. Right. And so, a lot of companies are out drilling like crazy and the market's not giving them a lot of value for that. By virtue, I'm not saying that we're not going to drill. Of course, we got to drill, but we have to have the platform properly set up for us to achieve, to deliver to shareholders return so that we can grow our value organically, so that we can reduce our cost of capital, put more drill programs, bigger drill programs together. I think you can look forward to, certainly we didn't drill for a year. So getting drills turning again on the deposit with better quality information, I think that gives us a better chance of achieving things that are actually going to move the market. But again, it remains to be seen. Exploration is always inherently risky. So what I always say is when you implement good process, you lay the foundation. Obviously, you go out, you execute properly. If we believe the geology is permissive, we've got the right vectoring and we've got the right economic sort of filter driving what we're trying to do in terms of prioritization, I think success begets success, right? So I think we should be looking at what kinds of holes are we going to drill? What are the results that should be coming as early as sort of January once we start drilling? We're expected to start drilling it as soon as the ground freezes in late November. And then in terms of where I would like it to be, I mean, sure, I'd like to see, $10 to $20 million programs, going in here, but it's got to be success driven, right? It's got to be success based. And, if we found, for example, as we saw when we did the deep drill program, those are expensive holes, right? And so there was no vectoring really done to kind of plan those holes. And we see evidence of a deep hydrothermal system here that needs to be explored with massive sulfide down to, 2,000 meters. But you got to do the vectoring. And if we hit something that looks like a really snazzy and exciting looking underground target, it's going to take more funds to really, it's based on a discovery hole, but then you got to follow it up with programs. So I would expect the goal for us is to ramp up, but we got to do it in a way that obviously doesn't dilute our shareholders unnecessarily.
Well, Dewey already has existing resource, and so that might be the best place to start. But when you look at the exploration program going forward, how much of it do you think gets centered on Dewey versus Jutel?
And that's a great question. And I think, again, I like to look at the focus of the program being certainly the low-hanging fruit for us at Dewey in terms of both de-risking ounces, getting better quality information geologically that can help constrain the model better, that can guide us towards development of the asset, and looking at the near mine extension potential, both long strike and at depth. I do believe that we don't get, it's a value linked strategy, is that we don't get any value for the Jutel package, right? Even though it's got all this high grade potential and we did have success at Eagle. It has, I said, it hasn't been systematically explored. We have all that Agnico historical data and analog, that was in an analog form, and Banker's Box been digitized. We got proper models, been QA QC'd. So we're ready to go at Jutel. I think that's going to be, if you call it that maybe 60% of the holes at Dewey and maybe call it 25% of them at Jutel, and then a few, of course, scattered in for discovery, to test high conviction discovery targets that can actually, move the needle. That would be a reasonable mix. Don't hold me to it because obviously the targeting work's underway, but we're pretty excited about the fact that we have this kind of playground to consider when we're actually planning programs. The limitation is not, the geology and what we can drill. The limitation is always the budget.
Well, and just lastly, I mean, this project has so many advantages, so many favorable attributes. So with this transaction, you've already doubled your attributable mineral resources. You have this clear path to a preliminary feasibility or feasibility study with a potential outcome of Agnico either buying back in or buying Maple Gold outright. But the stock really hasn't responded recently, despite the transaction. And so perhaps some people are waiting for the close or maybe a little more information around the drilling program. In your view, what do you think the key catalyst will be for investors to start to realize the value gap between Maple and some of its peers?
Yeah, it's a great question. I mean, I think across the board, I'm a student of macro, but I also, I focus on the things we can control here at Maple that will be value accretive. I will say this, like the peer group, in general for junior explorers and developers has not seen, the same type of interest yet that the producers have. Obviously, particularly our partner is a great example. They've had amazing outperformance in their share price, largely because they've got a Canadian-centered production base. And so in Canadian dollar terms, the gold price that's at 2,600, I mean, you're seeing just a phenomenal amount of free cash flow generation from, senior mining companies, particularly with assets domiciled in Canada. Now, what is it that actually produces people paying attention to the juniors, and particularly in our case, the high quality juniors? It's the market has been structurally focused, in my view, on, preservation and return of capital by the majors, right? And so, Agnico's obviously and others have been increasing dividends, and as they continue to expand their balance sheet because, they're generating free cash flow, everyone, I think, should be focused on I think there should be expanding equity margins across the junior space when people recognize and refocus on growth, and that the universe of high quality exploration and development projects in jurisdictions that are critical, that there's a dearth of them, right? You saw this with Goldfields, a major miner making a major entry into Quebec, announcing a transaction to acquire Osisko, right? Largely for Windfall. And Windfall was a deposit just like Great Bear, just like, Snowline and other things. I mean, a lot of people kind of knew about it, but it took a company putting real drill programs and real budgets together to actually unearth and make that discovery, something that, someone like a major could hang their hat on. So there's a lot of setup here for Maple that, again, Douay is a well-known deposit. The ounce count is there. It's all near surface, but what does success look like for Maple? If we're successful in doing what we're doing, we're not just waiting for margins to expand across the sector. I mean, we're looking for the catalysts. Like, we've done all the transformative restructuring work. It's different company and everything other than the name Maple Gold, which I still think is synonymous with Canadian gold exploration. So I've kept that. But everything else about the company, it's not like we were waiting for a better market. We just did the work, right? The market wasn't there over the last year. We did the work of getting this company set up. Now we're in a better market where the market is, as I just found out, we were down in Beaver Creek. We've got a very busy marketing schedule this fall. I think it's only a matter of time before people recognize where the high quality growth assets are. And us obviously not only having all the jurisdictional advantages, having a solid ounce count, but, and again, we love Agnico. They're great partners. They're the largest shareholder of Maple. We are here creating value for all of Maple's shareholders, right? And so people can talk about exit strategies, things like that. We are not there yet. And so I look at it and say, I appreciate that the largest gold mining company in Canada and the third largest in the world is right there, as an equity investor alongside other investors, and is helping us from the technical standpoint still. While we're not a joint venture partner with them because of a smart deal, the interest and the alignment is still very strong. I think these are the things that people who maybe weren't familiar with the Maple story, they need to start stacking up these tick boxes of, do they have the jurisdiction? Do they have the ounces? Do they have the partner? They have a management. They have all these things that kind of, differentiate you from your peer group. And I think it's only a matter of time before we see some type of recognition for that in the market.
I agree. And Kieran, thank you so much for joining us today.
Mark, it's a pleasure as always, and I really appreciate the opportunity to speak with you, and importantly to speak with your investor base. So talk to you soon.
Now please welcome the Mayor of Boca Raton, Florida, Mr. Scott Singer.
We are excited to have so many thought leaders in emerging growth companies join us in our city, one with a history of innovation at its core.
And here we are on the campus of the Florida Atlantic Owls.
You can start a company with a great product and become a multimillionaire.
Well, first of all, I'm thinking of the business. What is it, right? Is it scalable? How will I make a profit?
The world does not be a path to your door. There really is no such thing as a better mousetrap